Today, we're turning fear into finance. We're diving into the psychology of the seller carry.
A seller carry, it's like lending your teenager the car. You're proud, right? Until the insurance bill arrives.
Right. And what that really means is you have to structure it with smart guardrails, not just emotion.
Because the real challenge here isn't the numbers on a spreadsheet. It's good old-fashioned fear.
Which is why we call this the Everest of Persuasion. You're dealing with someone's retirement and their legacy.
So how do you actually flip that script? It's simple. You use a little psychology.
First up, loss aversion. People absolutely detest losing way more than they enjoy winning.
So you use that. You frame the all-cash sale as the ultimate loss because of taxes. Suddenly, your offer is safer. Next tool, identity alignment. This makes the choice feel like it fits who they want to be.
Exactly. They're not just a landlord anymore. They're the bank. They're the steward of the community's future.
You make it dead simple. It's like a pension. You get monthly checks, but you fix zero toilets.
All right, that's the framework. Now, let's get practical and dismantle the biggest doubts sellers always have. And the number one fear, you'll always hear this. What happens if the buyer defaults?
That's not a disaster. It's a backup ROI. You keep the down payment and every single monthly payment.
Okay, next one. But what if I need a big chunk of cash down the road?
That seller's note is a liquid asset. It can be sold, it can be refinanced, you are never trapped.
And the final objection is always, why shouldn't I just take the cash and be done with it all?
Because being done means walking into a massive tax bill and a brand new job, managing millions of dollars.
And you'd be leaving a lot of money on the table. On a typical deal, maybe an extra $160,000.
Look, this isn't about applying pressure. This is about calculated reassurance. You're building trust.
Which brings us to the big moral of the story. Never, ever confuse a massive tax bill with a real retirement plan.
Because it all comes down to alignment over argument. That's the key, every single time.